later and I'll send you a copy of the video recording. And for whatever reason, if you don't get a copy of it, please feel free to email me and I'll make sure to send you the links. I'm including my email in the chat for everyone. All right. So Charles, we're almost at time. And so we could get started just real soon. Charles, do you want to include your email too in the chat?
Sure,
Yeah, in case people want to reach out to you or get in touch with you.
absolutely.
All right. So looks like we've got, yeah, a few people on. Hi, Bobby from Florida. So we're almost at the hour, and this is recording. And so, again, if you want to get in touch with Charles or I, our email is in the chat. And then also, if you don't get a copy of this recording for whatever reason, please feel free to email me, suzanne.vetillart at PadSplit.com. I'll make sure you get a copy of the recording. Oh, we have someone from Turkey. Very interesting. Great. Okay, well, we're at 12, so let's just get started, Charles. And I want to thank everybody who's on the chat, who signed up for this webinar on a Friday and made time to come learn more about the Silver Tsunami. I met Charles, not too long ago, but we really kicked it off, the conversation about aging in place, co-living, senior co-living, shared housing. It's something that I, am talking about with people every single day. And so we thought this webinar would be a really great place to just, answer some questions and share some context from both of our points of view. So yeah, I think we'll start by Charles and I will both introduce ourselves and share more about the companies that we work for, and then we can kind of go into the discussion a little bit deeper. So I'll start. My name is Suzanne. My role is I work for PadSplit. I am based in the Seattle area. PadSplit is relatively new on the West Coast, so we are a nearly 10-year-old company, but we've only come out to the West Coast in the last 12 months. And so I was hired to help grow the Seattle market. And we launched really at the beginning of this year. My background is that I'm a real estate investor. So I've been a landlord in Seattle for over 10 years. I own multifamily, and I also own an adult family home. And that's really how I got connected to senior housing and what are the opportunities and what are, maybe some of the challenges too. And then my role is that, anywhere in the country, if you want to do PadSplit and if you are interested in doing PadSplit, I can help you. I can help you to evaluate your property, answer some of your questions about the platform. And then, once you do feel like you're ready to move forward, I help you kind of get the process going and get set up. So just really briefly, I know some of you probably know what PadSplit is, but I don't want to assume everybody does. So, PadSplit, we are a company that was started in Atlanta in 2018. And our mission is to leverage housing as a vehicle for financial empowerment. And we are trying to solve the affordable housing crisis one room at a time. So I like to highlight that because we are an impact and mission-driven company. We are obviously working very obsessively and aggressively to grow. However, behind, what we're trying to do is really, fix this problem that we have in the United States around affordable housing. So that's the mission. This is where we are across the country. We started, in Georgia and are mostly on the East Coast in Texas and Florida. And, Oregon, California, and Washington are all new markets for us. And we're growing, I would say, in the last couple months, we've just launched 10 new core markets. So yeah, we're growing really fast. It's really exciting to see what the company's doing. And to kind of give an idea of okay, in terms of how does PadSplit work? What do we actually do? This is a good example of, how we work with homeowners or people who have different real estate properties. Is we take a single family house, and instead of renting it as a single unit, we will rent it by the room. And what that does is it provides higher cash flow, higher revenue for the homeowner who's renting it. But then it also allows, someone who might be priced out of that zip code to be able to afford to live in a shared house, and maybe ideally closer to where they work. So that's kind of the general concept of like how PadSplit is, working to solve this housing crisis, and how we make it for homeowners, and then also how we equally make it win-win for the people who live in our properties. I'll let Charles get started and introduce himself.
So thank you, Suzanne. As you can see, a little bit more clean shaven on the headshot there than where we're at here. So what Suzanne just showed you, right, is the unlock. It's the same. We do the same house, the same walls. The asset doesn't change, but what changes is how you think about it. And when you apply that same thinking to a 55 plus resident, the math still holds. But what's interesting is that the experience is completely different. Different acquisition, different stability, different risk profile. And that's what we're going to walk you through a little bit here. So from my background, my experience, I got into co-living, what we call shared housing, a little over 2 years ago. So my background, I've been in real estate for almost 10 years. Did the short-term rentals, the fix and flips, the long-term rentals, etc. And it got to be a point where Suzanne really hit the key mark as it pertains to PadSplit, which was I was looking for a convergence of strong returns, strong financial returns, but also being aligned with mission-driven impact type investments. And that's when we identified the affordable housing challenge throughout the country. And so my partner and I dove in and formulated CoHaven Capital, and that's when we started our co-housing model. We have about 260 units now under ownership and management across the country in a few different markets. But the interesting thing is, and as I mentioned to you before, the economics make sense, but what I didn't expect was what would happen is that when the resident changed. So when we started focusing more on housing 55 and older residents, the whole model shifted. The tenancy got longer. The referral pipeline really replaced marketing for us. And quite frankly, the operational lift got simpler and got a little bit easier. And that's where we started our pivot, and we leaned into what we call legacy living. So Suzanne, if you want to go to the next slide here. So I talked a little bit about what we do. I mean, fundamentally, it's very sound and very similar to co-living. We take single family homes, small multifamily, turn them into shared households for adults 55 and older. We operate and we own them. And then we let investors participate in the returns. It's a simple model, however, unusual execution.
Yeah, I think what you and I really bonded on was the operational piece of co-living, because in terms of numbers, it sounds great. You're making more returns, but there's so much complexity to that. And so, yeah, I think with what you're sharing about focusing on a specific community makes a lot of sense when you're thinking about doing co-living. And then, Charles, I think what I was really excited, when I talked to you was just to kind of know the context. So we can really dive into, what is the Silver Tsunami? Like, why are we even all showing up on a Friday to listen to this? What does it actually mean for everybody? Yeah, I'd love to have you kind of, just generally touch upon like, what is the context that, we're moving into?
Yeah, so it's really amazing, right? So when most people think of the Silver Tsunami, people know in the abstract that it's a large demographic. They know that there are challenges, but not many people follow up with the pure data or what happens. And as you can see, even on the slide here, 10,000 Americans turn 65 every single day. 10,000 a day.
Mm,
It's an unbelievable number. And
yeah.
when they think about it, they think about hospitals or nursing homes or assisted living facilities. And clearly, that's not what we're talking about.
Mm,
But what we're talking about really are the 54 million Americans, as you can see there, that are 65 and older right now, where the majority of them are probably healthy. They're independent living. They're able to navigate and get along on their own, but
mhm,
living in a large home, living by themselves in isolation, whatever it may be, it no longer fits their lifestyle, right? And that's really where the gap is. And quite frankly, not many strategies are really leaning into this at a residential scale.
Yeah. I think what, from my own experience, I guess even just coming from a real estate investor point of view is that, we have apartments and we see people struggling with rents at, people who are at 100% AMI, people who make relatively good livings here in Seattle and earn, high income for the country, and they're still struggling. And so this number, the average assisted living facility costs 6,200 per month. I mean, it's highly unaffordable for the majority of people. And I've seen that, myself too, of, people or families that have to plan for, adult family homes or senior living, and it's really depleting their reserves or any kind of, equity that they do have. And so there's a huge gap, I think, in terms of what people actually need, and then how do we make it affordable or sustainable, for people as people age.
Yeah, and Suzanne, so and those are excellent points, right? And so I'm gonna bounce around a little bit. I'll jump ahead from what was in the presentation because I think it's relevant.
Yeah.
Where when we look at it and we
Hmm.
see to ourselves, and this is what we learned early on when we were exploring the market, which was on one end of the spectrum, you had the individuals exactly to your point who couldn't afford the 6,200 a month on average. It was just not even relevant to them, right? It was never on their radar. They're on fixed incomes. They're potentially recently widowed or widowers living either in a home by themselves where there's isolation and, quite frankly, fear of being on your own, which is a real dynamic, which we'll see later down the road, uh,
Yeah.
or quite frankly, living with family, right?
Mm.
And so that may have run its course a little bit. So that's on one end of the spectrum. The other
Yeah.
end of the spectrum, which is you've got your 6,000, 10,000, $15,000 a month assisted living, where quite frankly, 88% of the adults, and you'll see again later down the road, they don't want to be in a community. They don't want
Mm.
to be in an assisted living or a larger component. They do
Mhm.
want to age in home, or they do want to age in a home like setting. So
Mhm.
when you add those things together, there's a huge gap that's in the middle there that you had mentioned that we're looking to lean into and help support and address.
Yeah, I think, that this slide really, only 3% of Americans 65 and up actually live in nursing homes. And then, what percent actually want to? It is really this shift and gap that, maybe 20, 30 years ago, that's kind of what everybody just accepted. But I think today, I can't imagine most of the seniors, if I ask them, right, that they would choose that, or they would plan for that. So I think the gap is really, really big. And then the question is like, what is that solution? So I'll jump ahead to the solution. You, Charles, you mentioned, kind of like the safety reality, but I think, it is true that there is fear for seniors, right? Of living alone has its own risks, right? Of who will check on you. And, so people want to be independent.
Yeah.
They want to be in their home. However, that has its own risks, right? So,
I mean, and Suzanne, I do want to just mention, I mean, I was literally on a call this morning with another operator. I mean, it was literally this morning
yeah.
where he was telling me not too long ago, his mother lives by herself in their old home, and it's a large home, And he was explaining to me a story of in the middle of the night, she was returning from the bathroom and fell down
Yeah.
and couldn't get up. And
Mm,
it was lucky for them. She had, by some miracle, she had her cell phone with her. So she was
yeah.
able to call a neighbor to then call 911 and help out. But he's saying to himself and saying to me, if she didn't have her phone with her,
Mm,
there's a major issue here.
yeah.
And
Yeah.
so, again, that is a very real thing for
Mm,
individuals in this age bracket
mm,
to be very not only cognizant of, but
mm.
that they think of often.
Yeah. Yeah. So I think like all of these, points that we're bringing up, it does kind of give better context. I think the numbers really speak, for themselves that this is not an issue that's going to, go away. It's only going to continue to build. And so I'd love to hear a little bit more about, how are the solutions that how have you taken all this and then what are you building, where are you building it, and then I'm also really happy to share from PadSplit's point of
Yep.
view like what we see hosts doing actively across the country, what is actually working, where do we see the demand for solutions. So yeah, this maybe Charles, but you don't have to kind of go through this slide directly, but like how do you kind of how did you arrive to your solution for this kind of silver tsunami, growing housing gap, isolation for seniors, fear and anxiety about living alone. Yeah, I would love to hear more about what you guys are working on.
Yeah, and Suzanne, to your point, I do love PadSplit's model, and I want to hear more about that also. But what I would say to you is, so how we found out about it, and really where we leaned into it was we took a look at it at a macro level at first, and so
Mhm.
clearly we were looking at the demographics, we were looking at the need, we were looking at also where was institutional capital flowing into and where wasn't it. And
Mm,
so those are always kind of leading indicators, right? And
mhm,
so what we found was that again, as you can see, the institutional capital is leaning into the senior segment, but
mhm,
not this component of it.
mhm,
So what we felt was we didn't need more assisted living. We didn't
mhm,
need more 15, $20,000 a month
mhm.
facilities. So we
Yeah.
already have that. So
Mhm.
the what we were looking at was we knew co-living,
Yeah.
we knew shared housing, we knew your model, right?
Mhm,
And that's so we were trying to figure out what's the shortest distance between A and B,
mhm,
and to really dive into that. And so from there, we started reaching out to, and this ties into a little bit about how we fill our homes. We
mhm,
started reaching out to what we call referral partners.
mhm,
And so we started figuring out what are the best metros, what are the best markets, et cetera, which quite frankly, for us, the way we underwrite and we evaluated, were not too dissimilar to what they
mhm.
were for the co-living markets.
Yeah.
And so we started talking to people who were quote unquote boots on the ground, who were arm's length from the very people who we'd be looking to support.
Mhm,
Started talking to them about what we were looking to do, the price points that we were looking to engage them with, as well as the solutions for it. And they were starting to tell us, where were you 3, 5 years ago? We
mhm.
would have loved to have had you.
Yeah.
The buildup was there. We heard it from the boots on the ground as well as at the top level. And so that's when we, quite frankly, made the strategic decision to say, we're now shifting all our chips in the middle of the table for 55 and older.
Mhm. That's great. I mean, I think what, with this kind of housing gap is like what we're kind of talking about is we're really catering to or thinking about before assisted living, before memory care, right? And then up until the point where people can be independent. So it's like sort of that transitional housing, I would say. And I think that, when you think about sort of the opportunities and things that I've seen with co-living is we oftentimes especially from an investor point of view, we talk about cash flow or numbers or gross revenue. But I think what I've really seen is it's more of the community piece. One of the first pad splits that I visited was one in Atlanta. And we met the members in the house, and there was a woman who, was older in the house, and she became kind of like the house mom, and she helped to kind of take care of some of the younger members. And so it wasn't just like the fact that they were saving money, it was really more that they had their own kind of home community. And I think that, for some people, living with, roommates or, almost strangers is like a little bit more peaceful than living with family, where there isn't as much complexity. You come home from work, you just go to your room, right? And so I think that, even for a more senior, demographic, right, living with family is not always the right fit. And so what are some of these alternatives? What are these other options that people have, when they're looking for, I would say, transitional housing or different kind of housing?
And Suzanne, I think you're exactly right. And I think that, and that's where our two strategies, quite frankly, run very closely in parallel.
Yeah.
And so, and that would be actually an interesting question to you, because I do have quite, you have a unique perspective as well
Yeah.
in your role. I know what our portfolio looks like from a co-living perspective, but I guess I'd be curious from your perspective. One of the number one questions that I always got asked from investors and other operators were, how do you have
Mm,
4, 5, 6, 8 people living under one roof who
yeah.
never knew each other or never met each other?
Yeah.
How does that dynamic work? Maybe you can talk a little bit about how that is navigated.
Yeah, I mean, I'll go back to the slide where we look at sort of the floor plan, and I think what I have seen, this might speak more to PadSplit than maybe CoHaven's model, but like a lot of basically PadSplit is workforce housing. So we provide housing for people who want to live closer to where they work, and that basically means that during the day they're always at work. So I recently visited, one of our properties, and I was there at 9 a.m. and I was like, where is everyone? And everyone was at work. So I think, sometimes when we look at the floor plan and, we're converting an office or we're converting even like a living room to a room, people are like, but how do you do that? The reality is the people that live in a pad split are not hanging out on the dining, or on the living room and watching TV. They're working, and then when they come home, they're in their rooms and resting or sleeping, and getting ready for the next day of work. So one reason why people, you know, there isn't roommate issues is because people are kind of, more or less like on their own kind of schedules. And so I think that's just one of the things that I've seen. You're living kind of with your own space and you have your own privacy, but then you're not completely isolated. So I think that's kind of this, in between, right? Of you can be with roommates and be in the kitchen, and you could be sitting with someone at the dining table, having your meal, or you could just be in your room and resting and in your own space privately, in your evening. So I think that's one of the things that does make, this living model work. I also think that PadSplit does really provide a solution for flexible housing, because the traditional long-term rental is for, a one year lease and 1 month's deposit, and separate, expenses. You're paying utilities and other fees separately, and so it doesn't always match people's lifestyles today. People who are trying to figure out what their next, move is, or they're moving to a new city and they don't even know if they want to stay here permanently and sign a 1 year lease. And so with PadSplit, we allow our members to move in for a 3 months minimum agreement. And so it's not like an Airbnb. It is, 3 months minimum. And then the lease renews automatically. And what we find with that is that we give people the flexibility to move in, but they stay. Our average tenure is 8 months. So people are staying, but they've got that flexibility built in, which I think is missing in today's, traditional rental market. So that's one of the things I feel like PadSplit has been really successful at, is like we've been watching the macro and we're seeing how people's needs change in relation to housing, and we're adapting it accordingly. And not every, housing platform and strategy is doing that today. So I think that's really, it says a lot. I think one of the things, Charles, that knowing so much about how PadSplit works and then how it's specifically different for you with seniors is PadSplit for anyone who comes on PadSplit, we basically take care of like the listing, the leases, screening, showings, payment collection, and communication with the tenants, which we call members. What is it like for someone who's has a property and wants to work with you, or like what? Yeah, how do you actually work with either investors or people who have assets?
Yeah, no, absolutely, Suzanne. So I appreciate that. So we actually have what's called the CoHaven Operator Circle. So this is it's a community where, and I'll preface it with what we're doing and then how, and then I'll answer your question directly because it lays the groundwork. So basically what we're doing is we're taking operators who are either experienced operators in different strategies or
Mm-hmm.
even in co-living, for example, or other aspects who are looking to do the very thing that you're talking about, provide the blueprint, but not just that, but be in a room with others who've been there and done it, right? So
Mm-hmm.
it's a chance to partner with others. It's a chance to learn from others. It's a chance to really grow and scale. It's not, I've been a part of other communities where 90% of the people in there, all you're doing is just kind of quote unquote learning or watching YouTube videos. For us, I was looking around for a room that said, who are the people who are doing it? And
Mm-hmm.
that's what we ended up wanting to build. So to your question directly, Suzanne, how do people do that? Like they can reach out to me and we almost do a done for you option where you can work with us, you can partner with us. It's almost a white glove component, if you will, on one end of the spectrum, or we give you an environment and tools and a framework where you can do it all on your own, but within the framework of how we do it, so you don't have to learn how to do
Yeah.
it from scratch.
Yeah.
And then you can leverage the other members of the community as well in terms of, like I said, either partnering or, quite frankly, some are experienced in raising capital. Some are
Mm-hmm.
experienced in the acquisition side. Some are experienced in the ongoing management. But we already also have our own property management company that we've built specifically for shared housing and now specifically for the 55 and older. So
Mm-hmm.
those other individuals can reach out to us and we can help property manage those properties as well.
That's great. I want to kind of touch on the map. This is a map of where PadSplit is and our core markets, and we've actually added more core markets since then. Um, what that means for PadSplit is that if you're in any one of these, core markets that we have, that means that we're doing a lot of the marketing, and we're helping you to fill your vacancy when you've got a vacant room. Charles, where are you actually building, these properties and looking to grow?
Yeah, so currently our markets are North Carolina, we're in Charlotte, we're in Houston, Texas, San Antonio, Texas, and Phoenix. We're moving into Las Vegas, but the referral partners, which is a
Mm-hmm.
major driver of filling these properties, we're actually building and formulating national relationships and agreements.
Mm-hmm.
So it's advantageous, quite frankly,
Mm-hmm.
regardless of where in the country you are. We're going to be able to help support that. That's such a big lever that
Mm-hmm.
that being able to fill the rooms, fill them with the right people. Because again, the tenure for us in a property is multi-year.
Mm-hmm.
So to be able to fill it right, because if you
Yeah.
don't fill it right, it disrupts the whole dynamic of the home, whether it's our type of home or Pat's, whatever it is, right?
Right.
And so for us, that lever is so critical, and we've got unique relationships that we're, like I said, both regional as well as national deals to be able
Mm-hmm.
to fill those properties. So one of our operators is actually based in California. One is based up in Utah. So
Mm,
it really is almost irrelevant where you're
mhm.
located, where you want to do, and you can invest and build remotely. It doesn't have to be in your backyard. We
Right.
set up property management regardless of where you want to invest.
Yeah, that's really interesting because I had thought, where do you see geographically, the best, I guess, opportunities for something like this? But does it is that true? It's like it's almost every market, or do you
Yeah,
find?
I mean, look, there are always pros and cons based on the markets themselves, right? I mean, it's regardless of the model works in every market, but there are pros and cons for each one. So we actually have our own proprietary indexing program that drives towards certain markets and does scoring algorithms, all that. We lean heavily into AI on that.
Mhm,
But if you wanted to, for example, I'm looking at the map. If you decide you wanted to be in Wisconsin, well, we just have to understand the regulations, zoning, etc., and then
mhm,
we play within that world. But
mhm,
it's interesting, the requirements or the ideal criteria at a local level is very similar to that of a pad split or a co-living home where, again, we don't look to engage in HOA developments. We look
yeah,
to be within a certain distance of, shopping or public, things along those lines. So there are, our criteria for us, where, I think for PadSplit you recommend maybe 2,000 square feet or somewhere along those lines. There
yeah.
you go, 2,000. For us, we actually look at square footage per resident. So,
Hmm.
so because when you get to the older segment or the senior segment,
Hmm.
they're looking for a little bit more space. So we look at 325 to 350 square feet per resident, as an example.
Interesting.
So they're just little nuances that we're turning the dials that make it a slightly little different, but on material perspective,
Hmm.
it stays the same. We prefer B class neighborhoods.
Hmm.
We prefer nice homes because again, they're going to be living there for multi-year. Not that you can't do that in co-living. We've done that with our units. But again, very similar.
So Charles, when you say multi-year, like how are people signing leases and what are the period, I guess, or timelines that people are signing leases for?
So we do an annual
Okay.
lease for
Mhm.
ours,
Okay.
and then but we always have two out, basically two back doors or two outs, right? One is, we if somebody has stayed a minimum of 3 months
Hmm.
and it's just not the right fit for them or for whatever reason, we'll work out a process to transition them out. The other
Hmm.
aspect is something that you targeted specifically, which was we are an independent living home.
Hmm.
And we have both what we call independent living and independent living plus, so a little additional services. But
Hmm.
ultimately, we don't have salaried caregivers.
Hmm.
We don't have them on payroll. We don't do med management, things along those lines. So the other aspect of somebody being able to break their lease early or leave early is if they need additional services or support that are above and beyond what we provide for housing within
Hmm.
our environment, and then at that point we'll help them find the right environment for them.
Yeah, that's great. I just thought of this. I would love for me to give kind of like a persona of who lives in a pad split, and then I would also love to hear from you, like who lives in one of your properties, like what kind of age and kind of context. For pads, that what I've seen, in terms of like people ask like who are these members, they must be students, or what I've really found is like it is someone who is working and someone who is not able to afford a studio or one bedroom close to where they work, or maybe they can even afford it, they just want to save money. So it's a single occupant. Somebody is usually looking for living by themselves. They're not, a mom with three kids, because most of PadSplit is for single occupants. Um, the age could range, anywhere from, I think you have to be 18 years old to be a PadSplit member, all the way up to 65 and up. And really why this person is choosing PadSplit is because the payment their weekly payment for PadSplit for rent is they pay out every 2 weeks. So we have a higher collections rate. Our collections rate is 97%. And one of the reasons is because we let people pay when they get paid. So, if you really think about the calendar of like when you get paid and when you have to pay your rent, they don't always align. So if you're working paycheck to paycheck, it's like you could really just get behind, really easily if you have one, like something, a car payment or something goes wrong with your car and you're suddenly like not able to come up with rent. So that's kind of, the person sort of working situation. And then what we find is like people are spending way too much on housing. So this is one way for, someone who is, ideally not spending more than 30% of their income on housing. Utilities, Wi-Fi, and cleaning is all included in those weekly payments. So they're not having to make separate payments or think about, 1 month's deposit. All of our PadSplit properties are furnished. So when you move in, the idea is like you're coming in with a toothbrush and you can move into a clean, safe room. So you're not trying to coordinate your movers and bring in bulky furniture and disrupting the house. You're able to just get into the property really fast. So that's kind of who a PadSplit member is. And I've seen, because of PadSplit's growth across different markets, we'll have people who are moving across country and they'll live in one PadSplit and they'll move to another state and they'll move into another PadSplit. And they're actually creating a credit rental history that we can actually, share to your for credit purposes for you to build credit yourself. So I know that there's members on our platform that take advantage of that as well, just showing their rental kind of history. So all of these things kind of, when you think about who these people are, they're not someone you can identify with, right? It's like your grocery store worker, your barista, teachers, somebody who is working in the community and just is really priced out of our expensive housing. So that's who a PadSplit member is, or who lives in PadSplits. Charles, who lives in your properties?
Yeah, no, that's great. So the people who primarily live in our properties are they're mostly aged between 60 and 75.
Mhm.
They are both male, female. They're on fixed incomes, right?
Mhm.
This is where they're looking for a quality of life. They're looking for an environment where it's not isolation, but yet it's affordable. And
Mhm.
so, but they're able to, you know, get up and get going on their own. They're able to have that independent living. They're looking for some community. It's an opportunity for individuals to really, we've had a couple of individuals where their families. We mostly get our residents through family members,
Okay.
right? So it's not as often that the individual themselves is reaching out directly. It's more often a family member, more
Mhm.
so than not. And the family member is or members are probably distributed throughout the country, maybe not local, or even if they are local, they've been living together, and that's kind of again run its course a little bit.
Yeah.
So that lends itself to the individual who and more often than not, there may be a widower or a widow, and this is their option that they're looking for. One of the
Mhm.
things that I did want to mention, I saw a couple times come up in the chat here, and it looks like Ralph is all over it. One of the questions that has I've seen a few times in here is the discrimination or non-discriminatory policies and regulations. Uh,
Mhm.
so this is a different class when working with 55 and older. So there's a regulation called HOPA, HOPA, which is
Mhm.
housing for older persons, which came about in 1995, and so that allows specific marketing and targeting to have 55 and older in a household. There are three primary criteria that you have to be able to follow for that. The
Mm.
biggest one is it's very similar to a 55 and older true community.
Hmm.
where you have to be 80% of the residents have to be over 55. The way you
Mm.
market, you still can't discriminate against race, sex, etc. If you market, you have to market to the fact that even if somebody has disabilities, they still can provide independent living. You still need to cater to that. So it's a protected class. It's a
Mm.
protected focus that you can market to, and that's how we're able to specifically target for that. A little off on your question, Suzanne, but I saw it coming up a few times, so I wanted to make sure I.
No, I mean, I think there's some really good questions. Maybe we should jump into some of the questions just because I think, that's where the discussion, gets really rich. I can start by so what are yeah, so you answered the question about discriminatory housing issues to be aware of since you're focusing on 55 and up. And so Charles, you mentioned can you say again the
It's
resource
it's
or
it's HOPA. So
HOP?
it's housing for older persons,
Yeah.
and it basically it's a legal exemption that was rolled out back in 1995.
And is that so depending on where I am across the country, as long as kind of look at that, that would follow any jurisdiction more or
That's
less?
a good point. So it's a federal compliance. So what we would always say to you is always look at the state, county, and
Yeah.
talk to legal advice. I'm
Yeah.
not. I'll put my asterisks in and say I'm not an attorney and etc. And do
Yeah.
your own due diligence.
Yeah. I think that's really key, even when it comes to PadSplit, we're across the country and the way that we have our master lease is unique. But I always, emphasize to people to look at your local jurisdiction and really understand locally what you can do. And, for that reason, it's, one of the things that I would say thematically that I've seen on the West Coast is that PadSplit is really something that I feel like, cities are signaling that they encourage and want because PadSplit is not using any kind of tax subsidy to help with the affordable housing crisis. We're really driven by the market. And so we actually have a pilot program with the mayor of Portland. In Portland, you can get paid to put your house, on PadSplit and rent your rooms. Because in Portland and similarly in Seattle, where I am, I think it costs, $400,000 to build one unit of affordable housing versus, with co living or taking an existing single family house. If it's already in your ownership, I mean, and you're just now renting it, that could be an additional $1,000 of income a month. And so I just think, a lot of what I've seen is just opening people's eyes up to the context of what we talked about early in the webinar about the numbers of how what is coming with our aging population, but then also to recognize that we don't only have to build everything, right? There is existing housing and maybe it's highly underutilized and it just needs to be kind of set up differently. And I know that that's one of the things that I've encountered with, different hosts or homeowners across the country is a little bit of this anxiety and fear of like this change. And but I think that's something that I've seen for the people that I've worked with that have multiple properties and have had success with something like PadSplit is like you kind of have to have an open mind and you have to be open and kind of identify these things, maybe before everybody else recognizes it. And I think that's the moment we're in. So that's really, I think, the exciting piece of this conversation is like, it's not too late, it is coming. The sooner, I think you can kind of understand and see the opportunity local to you, the better. But yeah, you do need to have somewhat of an open mind, I think.
Yeah, I agree. And to that point, right? So again, I'll go back to there are many similarities in terms of the buy box, in terms of how it's structured. So for us, for example, we you know in some of our co-living properties, when we talk about Houston, it's a little bit more a little looser, let's say, in terms of the regulations, et cetera, than maybe New Jersey might be. And so we were building additional bedrooms to really maximize it. Whereas for our properties in the 55 and older, what we call the legacy living, uh, we now have everything from shared bedrooms, shared bathrooms, to private bedroom, private bathroom, to private bedroom and shared bathrooms, right? And different price tiers for each. I say that to say and connect it to co-living or for PadSplit from a standpoint of saying it's very easy that as you're walking down a path with one, if you start in PadSplit and or co-living and want to shift over, it's not challenging to do. And quite frankly, vice versa, if you walk down the independent living or 55 and older and want to expand into co-living on with leveraging PadSplit, it's not a rehab or a restructure to be
Hmm.
able to do it. So very similar to your point, having an open mind about how you're going to do it. But the one thing I would absolutely say to you, whether it's co-living and with PadSplit, whether it's with us for legacy living, or just on your own, one of
Hmm.
the things that I've seen, what even individual operators who own one property, let alone 20, 30, 40,
Hmm.
having standard operating procedures.
Hmm. Yeah.
Having documented processes that are tried and true
Hmm.
and that are able to be referred back to, even having house rules that the members, as you say, or residents for us, they all sign off on. Everybody knows what's going on and what the expectations are. That's so critical for
Hmm.
success. It's the
Hmm.
same thing where you can have five different operators who are operating pad splits, and you can
Hmm.
have five different results.
Yeah.
Or same for us. You can have multiple communities, networks, multiple independent living homes. It all depends on the exit. What you're doing and how you're doing it is what's going to yield what type of results that you're going to get.
Yeah, I think that is really, really key is, and I think it's similar like in Airbnb, which, I think people understand hospitality when I bring up like an Airbnb and it's customer service almost. But I think that's the other piece about, pad split or co-living or, Charles, what you're doing is like, it's still people and you're providing housing and it's something that is, I mean, people's basic shelter is like one of their, priority needs. And so the experience of it has to be positive. And I think the way that we, handle move in and move outs or any issues on the property, it has to be done really efficiently if you want to have that, less turnover and you want, less vacancy and you want your property to operate well and people to be happy in the home. And so I think that is, that's where you come in, Charles, right, with your experience in property management. With PadSplit, we're not a property manager. So we are really your kind of operating system. We help you to scale co-living. But that's where, people like me at Host Advisors can recommend you to someone who might be a property manager for PadSplit and understands co-living. So that's one thing that I try to help, advise people on is, not everybody wants to run this day to day and deal with, the broken toilets and, member issues or, these things happen. Any kind of long-term rental has problems because it's people and it's houses and there's naturally going to be problems. But I think that's really something, good for like, an investor or host to identify is, are you the one that wants to operate this? And do you have the means or the time or the resources to operate it well? I think that's really important question to ask before you go into this. And then if you don't, it's perfectly fine. You can find a team, you can find a resource, you can find someone who knows how to manage this professionally. So with me in a new market like Seattle, that's been really critical. In order for us to be successful in any market, we basically need to build this, community and vendor network of partners, outside of PadSplit that we all work together on. So I'm really happy to be able to, refer people to, whether it's a contractor or even someone in insurance, I'm happy to, refer people to these other people that I'm not an expert in, and PadSplit is not trying to be an expert in. We're trying to stay in our lane. I think that operational piece is sometimes it's so obvious, but it feels like it gets kind of completely missed.
Very, very much so, very much so. And to your point, Suzanne, I mean, it's very similar. Like, so for us, we'll do the full life cycle.
Mm-hmm.
So we'll do everything from full handoff to the
Mm,
other end of the spectrum of if you do want to roll up your sleeves, if you do want to manage it,
yeah.
you can leverage our own SOPs, our standard operating procedures, our own frameworks, things along those lines. So you don't have to figure it out on your own and then anywhere in between. But it comes down to, I think, to your point, what are your skills? What do you want to do? How do you want to spend your time? And execute accordingly. But make sure you have a playbook.
Yeah.
It would be the takeaway from that.
Yeah, I think that's so key. And so, anyone who's on this webinar, definitely come to Charles and I if you're looking to get into co-living or you're already doing it or you're looking to get connected, to different vendors that are in this ecosystem. I don't recommend anyone to do this by themselves. I mean, you can, but it's so much more work. And so I do think that's like one of the key pieces of, doing co-living successfully or any kind of real estate is like have a good team, know, different people that you can work with. Charles, we only have 10 more minutes. I wanted to ask you if there was anything that we didn't touch upon that you want to add, or if there was any one question that you thought we should have covered that we talk about before we close.
Yeah, I mean, to me, I think that just I'll close out my side. That I appreciate that. So I think that at the highest level,
Mm-hmm.
if you walked away from today with anything, I think it would probably be this. It's that the demand is just huge, right? The supply gap is real, and the asset class that probably most of us are already playing in
Mm-hmm.
that solves this, many of us already own and or understand it. It's just what resident are you putting in there? What's the strategy or the thesis within that asset class? And
Mm-hmm.
so for anyone who wants to explore the 55 plus side, what we call our legacy living model, the economics, even what a specific property looks like. One of the things I unfortunately didn't have time to was to go through even a detailed underwriting of what that could look like. I'm happy to
Yeah.
do that.
Mm-hmm.
If you want to reach out to me directly, my email was already in the chat. I'll put it in again. And then also our website, which is cohavenoc.com, which is our operator circle for those operators or individuals who want to become operators, that want to lean into this and want to be around other people who are doing it.
Mm-hmm.
We're looking at that for the benefit of all. I'll leave it at that.
Yeah. No, I think this webinar is really just an intro. And so I do think it's, the purpose of this webinar is for us to touch upon the opportunity and, some of the things that, Charles is working on, things that I'm working on. And then, for anyone on this webinar who has questions or questions we didn't cover today, please feel free to reach out to us. And if I can't answer your question, I will try to connect you to someone else who I think could, answer the question better. If you are interested in doing PadSplit, definitely reach out to me. I'm really happy to work with hosts across the country and help you kind of identify what are your true goals, like, to what Charles and I were saying, what is going to be your role in this? Because one of the things that I've learned, being in this role is sometimes we think about the short term of like, I've got a vacant property. I just want to get it filled. Like, let's do that. And you're not really even thinking 12 months out. and what the bigger picture is. And so, I don't think PadSplit is, best designed to be like a quick fix that you keep pivoting. It really is like a long-term rental strategy that gets better with time. And so I think that's really one of the important things that I like to kind of go and talk through with the people that I work with before we jump in, because the worst thing for anyone is like you come on and you do Airbnb and you quit after 3 months, or you come to PadSplit and then you quit after 2 months. And so it really is, thinking somewhat long term about what you want to do and what your goals are, and then what's the right fit. And I would say, as we go into the fall, I feel, Charles and I were talking about seasonality. And so what I've seen in 2026 is this is really a year where real estate has kind of changed and people have had to change their strategies. So I see more real estate investors who were flipping properties and are stuck with, properties that they can't sell, or they're not selling at the prices they want. And so now they're kind of shifting to a leasing strategy, and they're having to hold the properties. And so that's one of the things that I see. And then I think another theme that I see is like a lot of vacancy with Airbnbs and short-term rentals. And especially as we go into the winter months, I know that's one of the things Airbnb, operators don't love, is this kind of up and down of vacancy. So if you've got, properties, or you just want to learn more, definitely feel to reach out to me. This is my email. And then, Charles, I think, this
Suzanne,
was,
I'm sorry to interrupt. I just want to touch on one more thing that you just said, which was
yeah.
so relevant, which is two things. One is that as people are exploring other options, whether they were looking to fix and flip or what, long-term rentals don't work anymore
Mm-hmm.
as a single family home, as a single family rental, right?
Mm-hmm.
The numbers can't work unless you find some ridiculous deal.
Yeah.
The other aspect that I would say to you is that the short term rentals, like the Airbnbs, for a couple of years now, they've been
Mm.
having even regulatory challenges.
Right. Right.
So I mean, you don't have to go further than Atlanta. I don't
Mm-hmm.
believe you can even do Airbnb anymore in Atlanta. So for those who are doing it and are successful at Airbnb,
Yeah.
it's the upper echelon where they've invested heavily, they're in the right markets. The majority of Airbnb is not doing it anymore. So
Mm-hmm.
if you're an investor, if you have a property, you're looking to get a property, if you're looking for that long-term also cash flow, Suzanne,
Yeah.
to your point, whether
Mm-hmm.
it's co-living, whether it's PadSplit,
Yeah.
leveraging PadSplit as the platform, or
Mm-hmm.
this is where you can look out and say long-term, high viability, uh,
Yeah.
and I think PadSplit is positioned really well for that as well.
Yeah. And I think that, this conversation, you and I coming together, it really just kind of puts people to recognize there are some choices, there's options. And, if anybody did really want to go down a path of doing PadSplit and then moving to kind of senior co-living, like you do have that built in, but it really is, I think, one of the things where I see the pain of people who are struggling with vacancy and they can't get their properties to generate the income that they need it to even just cover their expenses or break even. And so I really love to be able to help people see that, hey, this, depending on the right property, this could be something that's a better fit. And not only that, the demand for this is there, right? It's not like we are saturated. That's something people mention to me, is this going to get saturated? And I really don't think it's like Airbnb, because this is, people living in the community. So it's not vacation, or even like, traveling nurses. Like it's people who are permanently living in the community or wanting to live in the community. So I think it's a completely different demographic. And so, yeah. Well, thank you, Charles. This was really great, and thank you to everyone. I think we had like 80 people on this webinar, so I'm so grateful to everyone who came out today. You should get an email from me if you register it. I'll include Charles on CC of that email, and include a copy of this webinar recording if you want to watch it or share it out with someone. Thank you, everyone, and have a great weekend.
Suzanne, thank you so much, and thank you for everybody